Well, g'day there traders and friends right around the world. You're here with James on behalf of Pivot Point Trading as I bring you this somewhat special Thursday pre-market update. Generally, I like to do these aftermarket updates. I was going to do one on the Wednesday. However, I have been caught up on a few things and this is the first time I've been able to sit down and provide you with this midweek market update. A very important time nonetheless, because today or during Wednesday's market activity, we have seen some very bearish intraday candlesticks set up or 2-day candlestick reversal patterns, which I'm going to walk through with you over the next 5 minutes or so. If you are going long this market or if you are in any long trades, I'd very much so encourage you to start closing them out. The reason why is because this market is looking very much top heavy, and it's really summed up by this one particular candlestick on the Dow Jones Industrial Average. Let me just change to my template and show you this. What we have seen over the past maybe 1.5 to 2 months has been some form of a slope of hope rally back into the declining 100 and 200 simple moving averages. Now we've been bumping our head for the past 4 trading sessions into this declining 100 simple moving average. We've seen a mixture of candlesticks. If we have a look back on the Monday's candle, we have what we call a hangman type of candlestick. We've got a spinning top on the Tuesday, and then today, Wednesday, a very much so bearish candlestick in the form of a shooting star candle. This is telling us that this first wave or the most recent bullish wave is running its course. It's coming to an end, and we are on the precipice of a rollover. Not only are we bouncing into the 100 simple moving average, we haven't even had the stamina or the strength at least to rally back up into the 200 simple moving average. So for those of the people who listen to me on YouTube and are in that pro analysis class, which I do over the weekend, we had one of 2 scenarios. It really looks as though door number 2 is going to be the scenario which is going to play out. I do not think this market has enough strength to rally back up into the 200, or at least at the moment, that is what the simple moving averages are suggesting, and also the intraday candles which are forming not only on the Dow Jones but also more importantly on the transports and also the Nasdaq, which I will cover. So my bearish trigger is still in, or it's still positioned perfectly to capture the selling wave, which I believe is going to happen very soon. If you want to squeak up your trigger, you can do that also. We have enough data. You can move it up to about 17,072. But I will personally be keeping mine below this little intraday swing low over here, which happened Wednesday last week. We've got very much, this market, pardon me, is very much overbought. We've got the candlestick suggesting that this is the time, or this is the location where the market is going to roll. This is it. If I change to the oscillating indicators, have a look at the stochastics, very much so overbought. The RSI is just turned down, and the MACD really looks as though it's about to give us a cross, a sell side cross as well. So I mean, if we've very much so stayed out of this bullish move higher. We've been waiting for price action to come into this red box, whether or not it got a rejection at the 100 or the 200 simple moving average. It appears it is going to be the 100. I am slightly hesitant because generally we will backtest the 200, and clearly we haven't done that yet, but definitely the candle signals are there to suggest, look, if you're in any long position, to get out of them. Really tighten your stops on any bullish trades and be prepared for at least the next selling wave to come back into these markets. The same is true for the S&P 500. Have a look at this. We've got that hangman type of candlestick on Monday. We've got that spinning top doji reflecting indecision on the market on Tuesday. And then we have pretty much like a one black crow on Wednesday. It's not a textbook one black crow. It's almost like an engulfing candlestick pattern as well, but it is very much bearish. If I change to the oscillating indicators as well, just look how overbought this market is. Stokes is just giving us the cross. It isn't below the sell signal yet. The RSI is starting to move down, and that signal line or the fast line on the MACD is definitely plateauing out, and it looks to be rolling over as I sit down and do this recording. If I change back to the simple moving averages, you can see again price action is pushed back up into the 100 simple moving average. It hasn't got as high up again as the 200 simple moving average, so I am a little bit cautious because again, generally markets will push back up into the 200, and that is the line in the sand which differentiates, pardon me, that between of a bull market continuation and the beginning transitory factors of what we call a bear market rollover. That is what we've been waiting for the past month and a half. We're in the sweet spot right now. We're right in the middle of this red box, which we've been very diligently and patiently waiting for. I'm very excited to see this market and how this market trades as we move into Thursday and also Friday's trading session. The Nasdaq, again, have a look at this. We've pushed back up into both the 100 and the 200. Interestingly enough, though, we haven't actually got the bearish cross. This is the only market of the 3 which I've covered where the 100 simple moving average isn't below the 200. It's not the biggest deal. It's not the biggest alert or sort of like a bullish continuation. It's just how price action correction is obviously factored into these calculations. At the moment, though, if we get a rollover again at this location, let me try and bring up my pen drawing tool. It's not being too compliant with me at the moment, and as I go through this, I'm bringing up all sorts of stuff. Let me try the command button. No, it's not working with me. One final move right now. Let me just try the function. No, it's not really working for me right now, but let me just explain this to you. Just use your eyes right here. It looks as though the Nasdaq is pushed back up into resistance, the red box, but it looks as though there's some form of a channel potentially setting up. So we've got some really good targets down here, about 4,550 all the way down to 4,368. Let me just scoot up a little bit of a sell entry right here, about 4,762 on the Nasdaq as well. If I change to the oscillators, you can see just how overbought, and we're starting again to see that sell signal. We haven't moved below the actual line in the sand, registering about 80 over here, but very much so warning us, look, get out of longs and be prepared to short this market when the entry is right. RSI is tanking as well. It's not tanking, it's just moving down below that overbought level, and the RSI, or pardon me, the MACD again, looks to be rolling over. Markets are somewhat in agreement. Definitely the Dow Jones and the S&P 500 is. The Nasdaq is that exception because we haven't got that 100 crossing the 200. But let's just say price does roll over from this location. Then we will see the cross take place. So the 100 will cross the 200 super moving average on the Nasdaq as well. Now, I told you at the beginning of this video, I wanted to speak about the Dow Jones Transportation Average. This is a market which I went over in great detail. It is a very good leading indicator because really before the markets actually broke down, or at least the three widely followed equity markets in August, the Dow Jones Transportation Average really got that breakdown in May. It's been a really great forward leading indicator, at least for the markets upcoming, or as we look at the Dow Jones Industrial Average, the S&P and the Nasdaq. Right now, we've rallied back into a declining trend line. So if you see over here, since February 2015, we've been making consecutively series of lower highs. You can see this. We've got one high over here, second high over here. We've got some more touches over here. We're in the perfect location to roll over because we're rallying back up into this resistance line. We've got some really nice candlesticks forming as well. I referenced these as well. We've got one black crows. We've got tweezer tops. And again, on Wednesday, we have some form of a shooting star. Not the nicest shooting star. It's not like the one we saw back over here in September where we've got that really nice shooting star in the 100 super moving average. But there's just various levels of resistance which are really signaling that, look, the transports are weak and they're starting to roll over again. Have a look at this picture. The sell signal has just confirmed on the stochastic. So if you did want to, or if you are following the transports, you have a very good opportunity to enter below 7,967. Targets on this market are going to come in just above support, which will bring us in at about 7,725, 35. You don't want to be greedy in terms of your targets, but definitely exit out of the trade on the transports at this level if you decide to take it. Personally, over the weekend, I spoke about the Dow Jones Industrial Average and how the DIAs, the ETF which follows the Dow Jones Industrials, that is my pick or my preference of the four. You can definitely set up trades on the Qs or even the SPYs, but of the three markets, or at least the three major widely followed markets, it's definitely the diamonds for me. Ticker symbol DIA. You have my entries. That goes back to door number 1 and door number 2. For those of you who listen to Pro, you have those entries. You know what I'm speaking about right now. And if you don't, I'd encourage you to have a look at that Pro analysis class. Outside of that, Walgreens Boots and Alliance is looking terribly bearish at the moment. We've got that shooting star candle on Tuesday. We've got an engulfing candle today. Earnings is around the corner, but if I could, I would short this first thing Thursday morning. I'm not telling you to do that because earnings is coming up, but this is looking exceptionally bearish. Tesla at the moment is toying all around that 210 breakdown. We came within about $1 of our target price of 201.31 yesterday. So if you have a look at the intraday activity, the low on Tuesday was $202. So we were within 70 cents of our Tesla stop or our Tesla target. And it looks as though this is going to continue. So I've got some good expectations for Tesla and it aligns very well with the overall market. Netflix is on the precipice of breaking down. I haven't taken this trade. 98.20 was a theoretical entry, a dotted line entry. I didn't have much confidence in it because, again, of all of this really ugly support in this type of transitional phase which we're in with Netflix, where we're trying to, or at least the market itself, market participants and institutional investors are starting to shift between that of a long-term bullish stance on Netflix to that of some form of a bearish correction for the price of Netflix. So just follow it closely. I wouldn't encourage you to trade it whatsoever. It's more so a stock just to follow, and it's got a good, I guess, forward-looking expectation of the market as well. We're right around this 98.20 entry. I mean, targets on this are down here at 85.72, but it is going to be a choppy and wild ride before we get there, and it may take a number of months before we actually do. I've had a lot of people email in about IBM as well. IBM is flinching right around that 139.06 entry. It looks very good for a continuational type of trade. I have this set up in my own personal account. I'm very excited about the IBM short. Goldman Sachs broke below 182.32. This is a nice little trade down to about 175. I didn't have this open in my account. I wish I did. I wish I had this short open. Down almost $6 during Wednesday's trading session. It's looking absolutely weak. Google, again, you can see this resistance level just shy of $700 a share. You can see it rolling over, but earnings is just around the corner. It is expected pre-market or actually aftermarket on Thursday. So unfortunately, we cannot trade Google. CVX, again, this is a great entry, 86.93. Pay attention to this. We've got this rally back up into our red box, which we've had for months now. We're getting all of these reversal signals. I hope this trade plays out and at least we can capitalize on it for a number of days, right up through to earnings, which is announced later this month. Let me just move my mouse over because I just lost the earnings date. It is pretty much the final trading session of October. It is scheduled on the 30th of October. So we will have enough time if the market is, or it works in our favor and we do see a short term or at least a correction back down on those lower levels on the overall market. Caterpillar, again, a lovely short, but we do have earnings tomorrow as well. So we do not have a trade on Caterpillar, but a very good short candidate outside of its earnings. Baidu, again, is pushing up into 149. I'm not too interested in this stock at the moment. Boeing Airlines is coming back up into that resistance level. You can see this again. Have a look at this. If I zoom out and show you all of this overhead resistance and this trend line, you can see how we're pushing up into the trend line. And just to see the intraday activity after earnings, we have what we call a very nice hangman type of candle. So I will put a short or place a short on this at about 135.80. Pay attention to Boeing Airlines. It looks as though it is set up to roll over. It's in the perfect location. No bullish trade on Boeing Airlines because the market itself is looking very weak. Amazon, again, is pulling back from that resistance level. It did hit 579.40. It did that on Monday. Now it's pulling back. I do not have a trade on Amazon. We just need to give it a little bit more time. And have a look at this little false breakout on Apple. You can see this dotted line. I wasn't too interested in it. The reason why was because the market itself is sort of treading water at the moment until we see the true market direction flow back in. But you see today's candle, at least Wednesday's candlestick, we have that very nice shooting star candle. This is what we call a false breakout. Now, it doesn't always have to reverse, but when you see this type of break above a structural level on decent volume, and then you see a shooting star candle, this has just got a warning signal written all over it. So if you are in Apple long, which is no one which I've been speaking to about, you should really place your stop. You also have earnings announcement coming out on the 27th, so it is going to be next week, but I mean, look, I wouldn't be touching Apple long at the moment, especially moving into earnings as well, because we have seen quite a lackluster earnings. A lot of stocks, which not only we follow, but also broad market stocks as well, are all gapping down on weak earnings, even though they are financially engineered. It's just a very weak time for corporate earnings at the moment. This quarter is very negative. So, I mean, it's really set the tone for the overall market. I hope this market analysis leading into Thursday's open has been beneficial. Again, we've got warning signals flashing everywhere on the market. It's not enough to say, look, go out and place puts or buy puts at market levels or even start shorting these indices at the moment. We need confirmation. That confirmation will come. Just be patient. I'm not in any market indice or market ETF trades at the moment, but upon the right contingent criteria being met, I will start jumping into those automatically. So have a fantastic Thursday, everyone right around the world. I probably will be back with you for a Thursday market update, but I just wanted to put this out there as we move into Thursday's market open because it is very important given the signals which we have just seen set up on Wednesday. All the best traders and friends right around the world. It is James signing out on behalf of Pivot Point Trading. All the best. Goodbye.